Hey, John, good to see you. Today we have a very important topic. We're talking about how geopolitical events affect the markets. Specifically, we're talking about the tension with Russia. US equity markets are lower as investors try to determine what impact Russia's latest moves will have on the global economy. Investors are pulling money out of stocks and into traditional safe havens like gold and bonds. And take a look at this because this is asset classes year to date. I think it tells a really interesting story, John. Oil at the top of the list. That's not a surprise. What else stands out to you?
Well, obviously, commodities, oil and commodities. Russia's actually rich with those two. But
Mhm.
the big thing I know, Russia, Russia, Russia is on our mind right now. But let's look at the bonds and the stocks. The bonds that has to do with the expectation that the Fed could potentially raise interest rates 5 to 7 times this year. And what
Mhm.
a lot of people have to understand is that if you're in bonds, a lot of the pricing, a lot of the volatility has been priced into those bonds going forward. Obviously, we've talked a couple times in the past about the potential of an echo bear market of a 20+% correction. So the stock
Right.
market's down. Obviously, last week, the markets went wild. Some huge down days followed up with one big day on Friday. And the biggest thing I'll tell people is that the markets don't like uncertainty, and they don't know what the grand design is. Yes, we know Putin would like to bring back the old Soviet Union, but there's fear amongst the people and the markets of what will go on in Ukraine and how bad it will get.
Absolutely. So let's dig into that just a little bit more because John, you have a team of investing experts behind you. That includes Brookstone CIO Mark Diorio, and he actually crunched the numbers for some other geopolitical events. Take a look at this table because you've studied it as well. You know the story it tells. The average one-day decline is negative 1.14%, with a total event-driven drawdown of negative 4.39% over 16 days, and then recovering in an average of 35 days. We think these things are just going to be drawn out, but that's not what we see here.
Yes, yes, absolutely. And while again Russia is the hot topic, the uncertainty. One thing that I love about this graph is look at the worst day in U.S. history, a day that all of us can remember like it was yesterday, 9/11.
Right,
That was an attack on US soil, on Americans, taking down two of the biggest financial institutional towers in this nation,
right.
and we had a 12% drawdown. And not to make light of the Russian and Ukrainian situation, because it's very serious, but we have to remember that this conflict is half a world away. So while it does could have some global implications, when we're looking at past events like 9/11, which directly hit us and our markets, we had a 12% drawdown. And like you said, the recoveries, once that certainty starts to become clearer, they bounce back rather quickly.
Mhm. And now you and I have often talked as well about behavioral finance, and you talked about the uncertainty. And when investors get scared, they tend to pull their money out, but that just kind of compounds their losses, right? When that happens, if you just miss 10 of the best days, John, look at this. I mean, you know this already. You could just lose significant amounts of money.
Yeah, and this is arguably one of my favorite pieces
Yeah.
outside of the diversification piece that Mark Dario put out. And this is actually the second time he's put this out to advisors. The first time was during the COVID crash. And it's really a great illustration of the failed strategy of market timing.
Hmm.
You cannot time the market. If you successfully time the market, it's pure luck. Because oftentimes with behavioral finance, and we had that one graph on a couple videos ago, where you have euphoria at the top, that's the point of maximum risk. Then it drops down to fear, desperation, and a sell off. And then you have the bottom, which is the point of maximum financial opportunity. But
Hmm.
oftentimes people are already sold out of around the fear and panic cycle. The markets bottom out and then they don't get back in towards the top, and they're missing all those big days that Mark Diorio had. And really, I mean, that's just showing missing the 10 best days of the market, the impact it can have on you. And it really goes back to the point that I always tell my clients that investing, especially in retirement, is not a 1, 3, or 5 year game, right? This is a 30-year game. And if you have a 30-year retirement, which I hope everyone does, you have to understand that you should have a plan that appropriately looks at your downside risk. And that's how you should be investing. Not for those 10 or 15% returns. Yes, we all love getting them, but what you're willing to lose when you have an echo bear market, when you have a Russia conflict, or some type of global war conflict or black swan event, and what you're willing to lose is what's important, because that's what controls the behavioral finance. And
Mhm.
I'll finish with this last analogy. For all the people that have been to Las Vegas, if you're a $5 table blackjack, $5 player at a blackjack table, then you belong at the $5 table. And there's nothing wrong with that. That's what makes you comfortable. The worst thing you can do is be a $5 blackjack table player and go to the 50 or $100 table. And that's kind of an analogy I use, that so many retirees have too much risk in their portfolios. They're worried about, they're trying to get that 10, 15, 20% return, which, yes, those would be nice, but they don't understand that with those types of returns comes the ability to have a 25, 35, or even 40% loss.
Right.
And statistics have shown, math has shown, that those 25, 35, 40% losses have a much more significant impact on your retirement and your happiness than any 15 or 20% return.
Yeah, that's so true. Like we have talked about before, you, John, you always talk with your clients, you help them strategically define that plan, and then it's just about the discipline of sticking with it. And so part of your job too is that anybody can call you so that you can talk them through what's going on in the markets. If they do want to talk to you right now, John, because there is so much uncertainty, what's the best way to reach you?
Yes. So you have two ways. You can give us a call at the office, 858-935-6210, or you can visit our website, www.gosecurus.com. And under the contact us, you can pull up our calendar and either schedule a 15-minute phone call or a 90-minute consultation.
Yeah, it'll make you feel better. That's right. John, thank you.
Thank you, Erin.